The stock that we'll be reviewing today is part of the defense industry, and currently it looks like it's moving into a new phase. Now, the stock's name is Apollo Microsystems, and let's take a look at it from a monthly time frame first. The stock has been on a parabolic rally, reaching highs of around 350 before moving down to 190 and then rising right back up to 290 as of today. Now, an important zone to mark out over here would be the 350 to 300 range. And the reason I say that is it acted as a supply zone. And what do I mean by that? Price has moved into it, been rejected, and moved right back down. Now, it's important to notice that despite the move downwards, the price hasn't actually broken the demand zone of around 200 to 250. And this structurally means that this is still a correction within a broader bullish trend, not a complete reversal. Let's move down to the weekly chart. The bounce from 190 to 290, that is not a confirmed trend reversal. It's a recovery move filling the imbalance left during the correction. There's still no clear weekly shift. For that to happen, what I believe is that the price must actually break and hold above the 320 to 310 range. And that would be around this region. Let's move down to the daily time frame as well to understand the real trade. After a fall to around 190, price actually reclaimed the 235 zone, and that gave us our first sign of bullish intent. Now it's approaching the resistance point of around 300 to 310 where supply sits. So now that is a key moment to look out for. Now let's bring in the fundamentals as well. Apollo Microsystems is deeply embedded in India's defense ecosystem. Growth is constantly growing, right? It's constantly accelerating. It's integrated into missile programs and critical systems. That gives it a structural moat that companies don't have. The revenue grew nearly 70% year on year in quarter 3 of FY 2026, if you just take a look at that, and over 50% for the 9-month period. Their order book as well is around rupees 3,900 crores, giving multiple years of revenue visibility. Then there's the ideal explosive acquisition. For about 107 crores, Apollo gained access to contracts over 4,000 crores rupees. And now to add the biggest recent catalyst, the company secured a lifetime defense manufacturing license, covering missiles, bombs, and advanced weapon systems. That's a structural advantage. And the stock actually reacted immediately to it, the stock jumping over 16%. Now, combine that with the government tailwinds. India defense budget is expanding and a large portion is reserved for domestic companies. Now, the only problem that I find with the company is the valuation, right? And when it comes to that, the stock is still trading at extremely high multiples. That means expectations are already priced in. So this stock would be a high risk, high reward setup. Let's understand how I would actually go about this. Now, I would wait for the price to break above 300 and then actually pull back to the 265 to 270 zone. So I would create a GTT of a buy order at 270, 100, and I want to buy it again at 270. I create a GTT. Now, in order to sell, I would create a one cancel the other where my stop loss would be 240. So that's 30 rupees stop loss. And what I would do with my targets is that I would place it at around 360. And I would take my profit at that. And that is how I would trade Apollo. Thanks a lot.